Hello and welcome! If you're planning a move for a new job here in the UK, you are definitely going to want to stick around. We are about to break down a major tax benefit that could literally save you thousands of pounds. This is your complete guide to the UK's relocation income tax allowance for the 2025-26 tax year, and it's been put together by the absolute experts at the renowned UK firm My Tax Accountant. So let's set the scene. You're moving for work, it's a massive upheaval, right? There's so much to think about. But what if I told you that a huge chunk of your moving costs could be covered, and it would be completely tax-free? We're talking about one of the most valuable financial perks an employer can offer. So the big question is, just how much are we talking about? £8,000. That is the magic number. Your employer can give you up to this amount to help with your moving costs, and you will not pay a single penny of income tax or national insurance on it. It's a fantastic helping hand from HMRC, but as you can probably guess, the rules well, they're very specific. So to make sure you get this right and can claim every penny you're entitled to, we've broken this guide down into 6 key parts. First, we'll cover the absolute basics. Then we'll dig into what costs are actually covered. We'll explain that £8,000 limit in detail, share some strategies to maximize it, flag some common pitfalls, and finally touch on a few special cases you need to know about. Right then, let's start from the beginning and build a really solid foundation. What is this allowance? And maybe more importantly, who can actually claim it? So, the key thing to understand here is that this is a tax relief. It's not a grant or a handout. It's specifically designed by HMRC to ease the financial burden of moving your main home for work. This could be because you're starting a brand new job, or maybe your duties have changed at your current one, or perhaps your whole workplace is upping sticks in moving. Now let's get into eligibility, because this is where the rules start to bite. HMRC loves this phrase, reasonable daily traveling distance. Now, they don't give you a specific number of miles, which can be a bit frustrating, but a good rule of thumb is a commute you can realistically do every single day without it driving you crazy. So think anything over, say, 45 to 60 minutes each way is probably getting into unreasonable territory. So your old home has to be too far, and your new home has to be close enough. Simple, right? And listen, this isn't just for typical employees. Self-employed contractors who operate through a limited company can often get in on this too. Okay, now for the part you've really been waiting for. What can you actually spend that $8,000 on? Let's get into the nitty-gritty of what HMRC calls a qualifying cost. This is brilliant because it lays it all out. On the left, you've got the costs that are directly tied to the physical act of moving. Things like legal fees, estate agent costs, removal vans, even your stamp duty, and temporary accommodation while you're sort of in between homes, that's covered. But look at the right-hand column. These are the costs HMRC sees as just part of your normal life, not part of the move itself. So, your council tax bill or your mortgage payments, nope. Redecorating your new place, sorry, that's on you. And this one catches so many people out, the cost of moving your pets is not covered. And that brings us to a massively important pro tip. Don't just guess your costs or round things up. You need a rock-solid paper trail for everything. Keep every single receipt, every invoice, whether it's a paper copy or a digital one. Because if HMRC ever decides to do a spot check, you can bet they'll want to see proof that every single pound was spent on a qualifying expense. Okay, let's talk numbers. Understanding exactly how this £8,000 limit works, and crucially, what happens if your costs tip over that amount, is absolutely key to getting this right. And here's a fantastic bit of info that so many people miss. That £8,000 allowance, it's per individual, not per household. So if you and your partner are both moving for separate jobs with your own employers, you can each claim up to £8,000. That is a potential £16,000 tax-free for your household. That can make a huge difference to your moving budget. But what if your costs go over £8,000? Well, it's not a disaster. Any amount your employer pays above that limit is simply treated as a taxable benefit in kind. As this table for the 2025/26 tax year shows, if your total costs are, say, £10,000, that £2,000 excess just gets added to your income and is taxed at your normal rate. So for a high-rate taxpayer, that's an extra £800 in tax. It's also worth knowing your employer has to pay Class 1A national insurance on that excess as well, which is currently 15%. Now, here's a number that might just shock you. 1993, that is the year that the £8,000 limit was first introduced. And would you believe it? It has not changed since. And this slide really shows you the impact of that decision.
Thanks to over 3 decades of inflation, that £8,000 back in 1993 had the buying power of around £18,500 today. So while the allowance is still incredibly helpful, it just doesn't stretch anywhere near as far, especially if you're moving to a high-cost area like London. This is exactly why so many people find their qualifying costs sail right past that limit. So, knowing that the limit hasn't kept up with the times, how can you be more strategic about it? This next section is all about the practical steps you can take to squeeze every last drop of value out of that tax-free relief. Okay, let's walk through this like a checklist. First, itemize absolutely everything. Make a massive spreadsheet of every single potential cost. Second, prioritize. Use that precious tax-free £8,000 for the really big-ticket items first, like stamp duty and your legal fees. Third, negotiate. Don't be afraid to talk to your employer about how they structure your relocation package to be as tax efficient as possible. You could even ask if they'd be willing to gross up any excess payment. That basically means they agree to pay the tax bill on your behalf so you get the full amount in your pocket. And finally, don't hang about. Get those expenses submitted well before the deadline. But being strategic isn't just about what you do, it's also about what you don't do. And this is where so many people trip up. Stay with me here. This next part could genuinely save you hundreds, if not thousands of pounds. We're going to look at the most common traps that people fall into. Right, the single biggest mistake is timing. Your employer must pay or reimburse you by the 5th of April in the tax year after you start your new role. If you miss that deadline, the whole lot becomes taxable, no exceptions. Also, remember that the £8,000 limit includes VAT, which can gobble up your allowance much faster than you think. A classic mistake is trying to claim for accommodation that isn't really temporary. And finally, if there is an excess, it has to be reported correctly on a P11D form. If your employer messes this up, you could get slapped with an emergency tax code, and you'll be overpaying tax for months until it all gets sorted out. It's a real headache. All right, for our final section, let's just widen the scope a little bit. The rules can shift depending on your employment status or if your move is an international one. For most employees, it's pretty straightforward, a tax-free reimbursement up to the limit. But for self-employed contractors, let's say an IT consultant named Sionid moving for a big contract, it's a little different. Her limited company can claim the qualifying costs as a legitimate business expense, which is great because it lowers her corporation's tax bill. But that $8,000 personal limit still applies to her. Any amount her company covers above that is treated as a taxable benefit in kind for her as the director, and it still has to be reported on a P11D, just like for a regular employee. And what about if you're moving internationally? Let's take Owen, who's moving from Dublin to Glasgow for a new job. Well, the good news is the £8,000 allowance is still available. Costs like international shipping and flights for his family all qualify, but things like visa fees or language lessons do not. And let's be honest, with the much higher costs of international moves, going over that £8,000 limit is almost a given. The tax rules here can get way more complicated, and other reliefs might come into play, so this is one situation where getting professional advice is not just a good idea, it's essential. So let's wrap this all up with the most critical takeaways. Number 1, you can get up to $8,000 tax-free for qualifying costs. 2, anything over that is taxed. 3, the deadline, the end of the next tax year, is absolute. 4, keep every single receipt like it's gold. And finally, number 5, always double-check what is and isn't a qualifying expense before you spend the money. It'll save you a world of pain later on. Okay, now before we finish, it is really important for us to say that the information in this guide is for general guidance only. Tax rules are incredibly complex and everybody's personal situation is unique, so you really shouldn't rely on this exclusively when you're making big financial decisions. For personalized advice that is tailored specifically to you and your move, you must consult a qualified tax expert. We couldn't recommend the team at My Tax Accountant more highly. You can give them a call on 020-857-08531, or you can drop them an email at info@mytaxaccountant.co.uk. For an even more detailed breakdown of everything we've talked about today, you can read their full in-depth article on their blog at the web address you see on your screen. And of course, don't forget to subscribe to their YouTube channel for more brilliant guides just like this one. Thanks so much for joining us.